Hey everybody, Lance Martin, Coldwell Banker Town & Country. It's hard to believe it is our 10th annual, this year, 2021 Real Estate Market Forecast. We are back in studio this year. By the way, thank you very much to Chuck Whitehead and everybody at Coldwell Banker Associated Brokerage. We're in their brand new studio. We actually shot here last year, but they've done a few upgrades this year. So congratulations guys, the place is beautiful and thank you for allowing us to shoot here. So, just to set the stage, I'm with Mark Dowling. I'll introduce Mark here in a minute, but this is our second year where we're doing a virtual market forecast. We were 6 days away in 2020 from a live event at the Fox Theater, and we got the phone call from the Fox Theater, not from the governor or anybody else, that said, we're very sorry, but there will be no live event this year at the Fox Theater. So we scrambled, reset the stage, and we did everything virtually last year. Quite honestly, I didn't really care for it. I did not want to do it that way this year, but we've fallen in love with it because we all love Zoom and we all love sitting at home doing this stuff remotely. So here we are. So this is our first interview for the market forecast. And again, I'll introduce Mark a little more thoroughly here in a minute. But everybody you're going to see today is pre-recorded. All of the videos that you're going to see in the next 3 or so hours were shot within the last 7 days. So if there's anything that changes in 7 days, I guess we'll have to make a footnote of that. So anyway, so here we go. So we're kicking it off. Our first speaker of the forecast this year is Mark Dowling. Mark is with the Inland Valleys Association of Realtors with offices in Riverside and what, Rancho?
Rancho Cucamonga.
Office, and represents, I may be off a little bit, you can correct me, but I'm going to say the majority of the Inland Empire. Some people might have an issue with
we've
that.
got about 4,000 members throughout the Inland Empire.
Okay.
Yes.
So there's a couple other associations in the Inland Empire.
Absolutely.
So for those of you, we don't want to step on anybody's toes. So we've got a whole bunch of associations, and frankly, our office is members of all of those as well. So at any rate, welcome, Mark. So you didn't join us last year because of COVID.
It was indeed, yes.
It was,
yes.
And we didn't know what we were going to do and how we were going to do it.
Right.
So we're 12 months removed, almost, I mean, literally to the week.
Yes.
So let's start with this. Who would have thought that 2020 would have been the year that it was? So, which by the way, to set the stage, in relation to the real estate game, which is what we're talking about, and the industry, which is why Mark is here today. I don't think Mark's going to give us any economic forecast. You're welcome to if you want.
Only if you ask.
Well, then I will ask. Well, so hold that thought. So Mark will tell us what he thinks the real estate market's going to do, maybe prices, interest rates. But the main reason I've got Mark and a few of our other speakers here is just kind of the industry. We have multiple audiences here. One of the audience is our realtors. So most of what we're going to focus on with Mark is realtors. So how was the realtor business in 2020? More agents, less agents?
Well, I can answer that now. You asked me this question in April of last year when we were absolutely in panic because nobody knew what was going to happen.
Right.
But it turned out to be a surprisingly good year from a membership realtor standpoint. In fact, not only did IVAR's membership go up, but I tracked the membership numbers of all the associations in the region. Everybody gained members last year, in spite of the fact that we had a really horrific second quarter. Right. The last 6 months of the year were extremely robust. We saw the market take off. We saw people get into the industry for the first time, and we saw people that were out of the industry come back. So across the board, it was a really good year.
Isn't it crazy?
Completely. Right. In April when we talked, I had no idea. Right. In fact, you wanted my opinion. I said, I have no opinion. Right. I have no idea what's going to happen.
Right, and I remember that. and it was honest, because I don't think any of us had any idea.
Right.
You know, and again, I'm setting the stage a little bit from last year. And by the way, Mark's going to kind of kick off all the speakers, so a lot of what I'm going to talk about with Mark applies to everybody. But I'm probably off by a week or so, but basically we go into shutdown around March 15th or so.
Yes.
We all panic until, when did you stop being ultimately concerned that the world was ending? Was it a few weeks or a month? Or?
Well, we saw March, April, and May be pretty awful from a market standpoint. All 3 of those months saw a significant decline, anywhere from 25 to 35, 40% decrease in new listings. The market was just contracting because no one was selling their home for those 3 months. Around June, things began to flip. And by July, with interest rates being where they were,
Right.
everything turned and the market just took off.
So let me rephrase it. So assuming you were nervous, and I'll be flat out. I mean, I probably had a mini panic attack between March and probably April 15th. So for me personally, it seemed like about around the middle of April, so 3 to 4 weeks in, that concern kind of went away. And I was still concerned behind the scenes, but my concern went away because people were buying and selling houses. And I didn't expect that. I just kind of figured everybody was going to shut down. Why would people buy a house if they were concerned about their employment?
Right.
Or why would anybody get into the real estate business at a time when we were concerned about a lot of things? So it was June. By June, you kind of felt
May,
like,
June, I began to see the numbers decrease and start to even flip toward a positive market.
right,
Excuse me.
and that continued through.
Through the year and up until today.
Right.
Absolutely.
It hasn't stopped.
Oh my goodness, no.
Right.
And it's getting even hotter.
Right. Now, again, I'm more, well, maybe, you guys, by the way, Inland Valleys Association does a great job with their market data report. Do you make that available to everybody, or is that members
Everybody,
only?
it's online.
Okay.
It's on our website.
So this is the deal. We do some good stuff with some data. You're going to get a whole bunch of good data here over the next several hours. Inland Valleys Association of Realtors website has monthly market data reports. Very, very nice, very accurate. So you follow the stuff as much as I do. This is not a trick question, so if it sounds like it, then just stop me and I'll untrick it. Was the fourth quarter, or was it just a continuation of the summer?
It was a continuation of the summer. If you remember, January and February last year were the best 2 January and Februarys we've had in probably a decade.
Okay.
I mean, last year we started off extremely strong. Everything got derailed in March.
Right.
April and May. Those 3 months were really a transition period. But that was it. After that, things just took off.
Right.
And it's continued that way.
And it didn't stop.
No.
Okay, I'm off topic here a little bit, but I'm thinking of it and I don't want to forget. Okay, let's just set the stage. So normally we slow down a little bit. We kind of have that traditional, hey, we ramp up in April, May, June, July. For me, it used to be April, May, June, July, August, maybe even September that's when you go out and you take care of business. And then you kind of had that fall off a little bit. Kids get back in school, and then the fourth quarter generally is a little softer. Well, that didn't happen this year. So we just kept on going. Didn't slow down in September. Now again, nobody's in school. Kids are home. Nobody's taking vacations. Kind of made sense, right? So assuming you were going to buy a house in April, May, June, well, why not buy one in August, September, October? So are you agreeing with me? The demand for real estate just charged all the way through, frankly, not only all the way through the fourth quarter, but up until now.
Absolutely.
Right.
Yes.
Little bit different now, though, because we have nothing to sell. I mean, how much of an overstatement is that we have nothing to sell?
Well, you track those numbers more closely than I do. I mean,
Right.
every so often we'll talk, and it's almost horrific when you look at the demand compared to the supply.
Right.
I mean, the fact is, we were talking a few weeks ago, and you said in the cities that you have offices in, 4 different cities,
Correct.
Representing what, 500,000 population?
I would say. So Mark's
Less-
referring to our 4 offices are Moreno Valley, Redlands, Claremont, and Covina. Those cities. Now, obviously, we do business in the
All over.
peripheral, but those 4 cities
Had about 140
it was
homes
100,
available.
I think 150, 160 active listings,
Yeah.
active or coming soons in all 4 cities.
Right.
Now, that doesn't mean anything unless you kind of have a number to compare it to. That's less than 10% of what that inventory would be, even anywhere close to healthy. So it's horrific. I mean, a year or 2 ago, we were complaining about Moreno Valley. Moreno Valley had 150 listings, and we were like, oh my God, there's only 150 listings in the whole entire city of Moreno Valley. Well, now we had 150 in all 4 of those cities.
Yes.
So you're seeing that everywhere.
Oh, absolutely. Yes.
Okay, so let me ask you a question that hopefully you have the answer to, and we can just drop the mic and the forecast is over. What's going to change that? What's going to change the seller's mindset to say, hey, I think it's a time to move and move up or move out?
Well, I don't think there's going to be one easy answer. A few weeks ago at IVAR, we had a vice president from D.R. Horton speak.
Okay.
And he talked about the home construction industry, not only for D.R. Horton, but more broadly. He sits on the board of directors of the Southern California Building Industry Association. And he point blank said we cannot build ourselves out of the supply problem that we face.
Right.
We can make it better, but we can't build our way out of it. I mean, he even bluntly said that we don't even have the labor to build what we want to build. He said we're only at about 50% capacity on the building side, and there was just no labor available. So we're going to see some increases on the labor side and on the home building side, but it's not going to be enough.
Right.
I mean, we're going to see Prop 19, the ability for seniors to then transfer their property tax basis from county to county, depending on where they move. Actually, it doesn't matter. Anywhere in California, they can take their property tax basis with them.
Yep.
Is a little bit more of an incentive for some people to move. Interest rates are extremely low and attractive for people if they're looking to move.
Right.
But there's not going to be an easy answer, and there's not going to be one answer that's going to get people out of their homes. Earlier today, I had a conversation with someone on this issue where he was under the impression that all of the default issues, the people that are behind, the forbearance issues, is going to cause almost a flood of homes coming back into the market. I don't agree with that.
Right, neither do I.
I don't see it.
Right.
The
numbers don't bear it out.
No. And number one, the biggest difference, and you cannot compare the situation we're in now to, say, 2008.
Right.
The biggest issue is people have equity. Home values continue to go up. People have equity, and when you have equity, you have choices. Right. Whether you're negotiating with the bank on a forbearance issue, or even if you choose to sell and cash out, you can do that easily.
Right. And then everybody who's bought a house in the last 12 years, or certainly the last 10 years, actually qualified. Right?
Yes.
As opposed to maybe 2005, 6, 7, when we were, in mad world.
Correct.
So, well, again, by the way, my iPad died, so I don't have any questions, so I'm winging it, guys. I put it on airplane mode, and I didn't realize when you put your iPad on airplane mode, you go dead. So, well, we can leave that in. So, the forbearance, eviction moratoriums. Okay, and again, I tend to look at the broad market, what's going on in the United States, what's going on in California. But if I'm being completely honest, I probably am even disconnected from Newport Beach. Okay, I might even be disconnected from Temecula, which is more we're shooting in Canyon Lake. But that Inland Empire, I know that really, really well. The foreclosure or the delinquency default numbers are almost non-existent.
Right.
And frankly, even the eviction numbers, which we hear so much about, oh my gosh, when we come out of COVID, all of these people are going to be evicted. We do a lot of property management, you know that. And our number of delinquent tenants is actually less than it was pre-COVID. So I completely agree. You gentlemen, you were talking, oh my gosh, what's going to happen? Are we going to have all these foreclosures? We have equity, we have all the rest of those things, so I don't see that. So before we get back to the industry side, let's go back to kind of where we started. So if you want to give us an economic forecast for 2021, what are you feeling?
Well, look, from a macro standpoint, I mean, all the economists are looking at a robust 2021. I mean, I saw Goldman Sachs yesterday said they're looking at an 8% growth. We have not seen that number since 1984 when it was 10%, okay? So that is an unusual year. And they're looking...
8%.
8% was Goldman Sachs' prediction, and they're looking for that to carry into 2022 as well. So on that side, I think we're going to be fine. The biggest issue really from a real estate standpoint is what are buyers going to be able to do in the wake of not having enough homes to buy?
Right.
That's the challenge. This is all about consumers, buyers, and sellers, and what do they want and what's available to them.
Do we see upward price pressure? I think, of course, we should. More demand than supply. But I'm almost thinking, at what point do the buyers kind of just check out and say, I'm just going to wait?
There's already buyer fatigue.
Right.
I mean, particularly people that are looking at first-time home buyers, people that are looking at 5% down payments, FHA financing. I mean, if you're having to come in with cash above the value of the house, you are not going to be a strong buyer. If you do not have that money, you're not going to be a strong buyer in this particular market.
Right.
Now, the good news is it never lasts. I mean, whatever the market is today is not going to be the market in 6 months or a year and a half. So things change. But short term, we're going to see continued constraint.
Yeah. I have our agents come regularly. We had a sales meeting this morning before we did our thing here. 30, 40, 50 offers on a property.
Yeah.
And it's funny, it's not even it's not even you got to be 20%. You could be all cash at full price and still not be the winning offer.
I've heard that, yeah.
Craziness, absolute craziness. Okay, so let's leave that alone in a little bit. I want to come back to the industry side, but I guess it's partially the market side. Everybody wants to talk about iBuyers, okay? Mm-hmm. So we'll leave out the names, we'll talk about the names of those folks later. I don't want to put Mark on the spot. But, this new phenomenon, which is not really new anymore, it's a few years old, had a huge head of steam pre-COVID. kind of pulled back in COVID, and now they're back. So for those of you that aren't familiar with the iBuyer phenomenon, it's basically large institutional blocks of money, hedge funds or whoever it may be, that are basically buying houses. For the most part, cutting out the normal industry that you and I are so attached to, the realtors, and then reselling them. In theory, for a profit. So I guess I have a couple. I could go on for 3 hours just about iBuyers, guys. But a couple of things maybe we could touch on. So what do you see the future of this? Is this something that's here to stay? And assuming it is, what impact is that going to have on us, on the Inland Valleys Association of Realtors, our membership, our ability to make a living as realtors or as broker owners? I think Tom Ferry, this is pre-COVID, I think Tom Ferry, this was August of 19. I think if I'm not mistaken, he felt that this could be as much as 20, it might even been 30% of the market. So again, I'm guessing, we've got to verify that. But, so what do you think? What's the future of this and how's it going to impact us?
Well, look, let's start with this. And I'm old school to the extent I just look at supply and demand issues. Okay, that really is what drives everything. And consumers drive everything. So it's what consumers want. Consumers want transparency, they want convenience, they want fixed times, frames, they want certainty of dates. I mean, they want those things. And quite frankly, I do too.
Right.
I mean, I'm a consumer. That's what I want.
Right.
Driving over here, I was just thinking, you were probably going to ask me something along these lines. I realized everything I'm wearing right now, excluding my socks, I bought online. Okay. Everything. My glasses, everything. My socks, for whatever reason, I bought those at Target. But I shop online a lot, and maybe I shop online more than some people. I bought 2 cars online. Okay. Sight unseen, delivered to my house.
Delivered to your house.
Bought them online.
How was that experience?
Perfect.
Would you ever
For me,
will you ever go to a dealer again?
I did go to a dealer the last time I bought a house, but I'm certainly open to the idea, having done it twice online.
Right.
But for whatever reason, the last time I just went to a dealership. It was a great experience. Look, it's not going to be for everybody. Most people buying a house is still complicated and there's risk associated with it, whether you're a buyer or a seller. So there's still a role for expertise and value that realtors can bring to the table. However, there is going to be a role for a more streamlined process for people to buy homes, whether it's 100% online or some combination of online and some sort of new form of a brokerage model. Right. Absolutely, it's going to happen. It's real, it's not for everybody, but it's going to work.
You think that's going to be a significant percentage? Again, going back to Tom Ferry, and again, I may have his number wrong, but to me, anything above 5% is significant. Because if, as a broker, owner, manager in my world, or even as an individual agent, you take away 5% of our transactions, I mean, that might be my entire profit with those 5%. So do you think it's going to be significant?
I don't know that it's going to get to 5%. Here's one thing that was an issue, and you were around at that time in the 90s when the MLS became a digitized format as opposed to a book. And everybody thought we were going to go out of business, okay? There were more FSBOs in 2000 than there are today.
Okay.
In spite of the fact that more consumers have access to data, information, all sorts of resources in order to sell their home if they want to sell it by themselves than they did 20, 25 years ago. Right. Yet more people are choosing to list their home with a real estate professional, and that's because it's complex. It's not easy, and it's risky. So until that problem is completely solved, no, there's going to be a fundamental role for professionals for a while.
Okay, relationship business.
Yep.
You know, I was listening to somebody a week or so ago and said something, I heard it 1,000 times, but it was another one of those moments, I've heard that before, but boy, that really sounded good. And it was directed towards realtors, and you're talking about us buying leads, whether it's through any sort of syndicator. And the question was, well, why are you buying leads if you've been in the business for any period of time, 5 years, 10 years, 32 years? Why would I want to buy a lead from anybody? Because if I've done it right, all my leads are here. I mean, I should have enough of a customer base, happy customers, which brings me to the customer experience, which brings me back to the iBuyers. I'm concerned that maybe a significant percentage of the consumers out there maybe haven't quite had that 5-star experience with a realtor and are thinking, well, geez, let's try this out, So I do think it's going to be a higher percentage. I think I'm more in line with what I think Tom Ferry said, and I think it is going to be a larger percentage on the iBuyer side. Just from a pure, I don't know, we haven't talked about Amazon, but I mean, look at what Amazon has done, and then look at where they are today. And again, I'm kind of like you. Maybe I might be a little bit farther behind. I don't think I had bought anything on Amazon 2 years ago. Now, I think I did buy my socks on Amazon. So it is just quite a different world. So, okay, how do we put a bow on this? So from an industry perspective, you interviewed me and about 5 or 6 other brokers a few weeks ago, and you had said, you quoted me, and I kind of forgot it, but the gist of it was 25 years ago, Lance, you had told me the story about the MLS going, online to the public for the first time, MLS books going away. And I had made some reference, oh my gosh, I'm terrified we're going to be out of business in 5 years. By the way, I'm always terrified. I am. I mean,
it's probably a good thing.
Even when things are good, from a business owner perspective, I always kind of live and I'm never comfortable, and maybe it's just who I am, and I'm OCD that way. But I think it served me well because I'm kind of like that, I'm the gazelle looking, the lion, not to use the NAR analogy, but I'm waiting for that lion to come get me. So with that being said, 25 years ago, I think you were quoting me back, oh my gosh, where are we going to be in 5 years? Are we going to be out of business? Is it going to look materially different? Well, the reality is, yes, it's different, but the successful agents, the stuff that we do that works is the same stuff we did 30 years ago. So kind of maybe to your point, let's fast forward 2 years, 5 years, 10 years, the pros are going to be there, right?
Yes.
Postcards work. Postcards work, right? You send a postcard to somebody. Postcards are dead. Nobody sends postcards. Well, geez, agents who are sending postcards are doing well. So from an industry standpoint, forget about whether property values are up or down, or we have sellers or buyers. What's a real estate agent going to look like a year from now or 5 years from now? Is it going to be materially different?
Fundamentally, no. I think, look, you have agents now that you probably have them in 3, 4, 5, 7 different categories on how they function and how they operate. There are some that just have that personality and that charisma when they have their relationships, and they are absolutely relationship driven. They have their core, they have their sphere, they're contacting and they're talking to people, and they generate business. You have some that buy leads. You have some people that are social media mavericks that are always online, always making it happen, and so forth. You have some that are cold calling still. So I think all of those are still going to come into play. It may look a little bit differently in the future based on technology and people's comfort level, but I think there's not going to be one single successful type agent. I think we're going to see a variety of agents that have different skill sets. Fundamentally, I think what's going to ultimately make the difference for agents and their ability to succeed long term is to really focus on relationships and value. Right. If you cannot maintain relationships, you'll become marginalized, and then all of a sudden the iPad and the iBuyer model works better for somebody else. Right. So you got to stay in front of people. You got to talk to people, and you have to make those relationships long term and lasting.
So you probably could have said that, or I probably could have said the same thing 30 years ago.
Right.
Right? Right? Or even a year ago, or who knows? We'll replay this 5 years from now and we'll see what we got. All right, Mark, thank you so much for kicking off our 2021 real estate market forecast. We got a ton of content ahead of us today, and we'll be also posting Mark's video along with everybody's video online on social media, YouTube, and all of those places. So anyway, thank you so much, and
thank you, Lance.
Good job. Perfect.
Great.